In this video, I'm going to tell you exactly which investing strategies bring in high returns without any of the weird fluff that gurus tell you. I'm Joseph Khateri, licensed realtor in the state of Virginia and Section 8 investor. I have helped hundreds of investors go from 0 properties all the way to 100. And now let's go ahead and talk about the 6 different strategies. We have Section 8, index funds, multifamilies, Airbnb, day trading, and the BRRRR strategy. By the end of this video, you'll know exactly which one fits you, which one you'll probably fail at, and exactly how to get started with each of these strategies. So we're going to start out with my personal favorite, which is Section 8 investing. Section 8 investing is when you as a landlord take in and accept a housing voucher from a low-income family. And then once you accept the voucher and they move in, an inspection is done on the property. If you pass the inspection by the government, then the government will literally direct deposit the rent to your bank account every single month. For example, my last deal was a home was $100,000, which you can find out in the Midwest. The government was willing to pay about 20% higher than what a regular tenant would pay. So they ended up paying about $1,500 for that home, which means it's a 15% return on investment. And the rent is literally guaranteed since we passed the inspection fine. So it's guaranteed rent. You don't have to rely on some tenant paying. The tenant tends to stay longer because finding these homes is a hassle for them. And on top of that, it's a little bit higher than regular rents, especially because we go for these super cheap homes that are about $100,000. Of course, there are cons to it, such as you have to do an intense screening process for the tenants. We don't want someone who's going to come in and try to steal the fridge on the first day. You also have to do quarterly inspections just on your own to make sure that everything's up to code. So bottom line is that Section 8 gives you a reliable peace of mind, and it is an extremely reliable source of income even during hard times. Of course, if you're watching this video, you probably are already aware that I have my own mentorship program where I teach students from beginning to end how to invest in Section 8 properties. I hold your hand throughout the process. If you're interested in that, click the first link in the description. Number 2, onto index funds. Now, a lot of people think that I'm like 100% into Section 8, which I generally am. However, I think index funds are the exception for me. I do own a decent number of index funds. Specifically, I own VOO, VGT, and VT, and I'll explain what those are in a second. But index funds work like this. You basically buy what looks like a stock, but it's actually a slice of 1,000 different companies. Like for example, you could buy VGT, which is an index fund. It's specifically a tech index fund, and inside of VGT has a little slice of Amazon, a little slice of Apple, a little slice of Microsoft, etc. So here are the 3 that I've just mentioned. VOO, which tracks just the S&P 500, which is the top 500 companies in the US. VT, which tracks a global market, so all across the world. It's a little bit better for diversification because you know what happens if the US economy does poorly, but China's does great. Well, now you have options. You know, your stock doesn't just plummet because of that. And then VGT, because I like risk. I'm young, I can afford the risk. So I'm willing to invest in a riskier tech index fund because I love tech. Historically, you'll get about a 7 to 10% annual return, which just for comparison, Section 8 was at about 15. You might be thinking, oh, why wouldn't everyone just go for Section 8? And why do you even have this in the first place if you're getting 15 from Section 8? Well, it's because it's great for retirement accounts and just ease of mind. You invest it and never touch it again. Low effort. You can just leave it alone, and then in 30 years, you'll be a multimillionaire. What do you need for this? Well, you need a brokerage account, and that's it, really, just a brokerage account. I believe they might have some minimum deposits, but that's about it. Next up, we have Airbnb/Airbnb arbitrage. You basically buy a property or rent a property that is in a very nice area, and then you're going to sublet it to short-term tenants like Airbnb. So it's a super low upfront cost if you do the Airbnb arbitrage because you don't need to actually buy a home. You can just rent a really nice home and then sublet it. However, there are cons to that, right? Which is that most landlords will never allow their home to be turned into an Airbnb. So being able to find a landlord willing to accept it is super rare. Now, what about the flip side? What if you just buy the home instead? Well, because you're buying in these really nice locations, because that's what you kind of need for Airbnb to work, then that means you are also buying at a higher price typically. You're typically buying the top, 30% of homes in a certain area. So because you're buying at a decently high price, and because management is simply more expensive, it's usually, I think sometimes 30% for Airbnb. That means your room rate minus the rent and management fee, your margins are pretty slim. So this strategy gives you like flexibility and freedom if you ever want to stop doing the strategy. And not to mention, I think Airbnbs are ruining a lot of areas. I mean, you see this all over the news, etc., where these mega companies or these like crazy big investors are just buying regular single family homes that could go towards families that actually need it, and they're just turning them into Airbnbs. And in my opinion, it's kind of a waste of a good home. Fourth strategy is day trading. It sounds sexy. Make money in hours, make $1 million in a day, right? But the real story is that 90% of traders lose money. So the point of day trading, for those that don't know, is that you buy and sell a stock usually within the same day. Now let me give you an example. Let's say Nvidia is trading at $300. You think it's about to go up. You buy it for $300. It goes to $310 within, 4 or 5 hours. You sell it. Now you just made that $10 profit times however many shares you bought. Sounds simple enough, right? Well, fees and commissions eat into your profits quite a bit. Let's say you have a brokerage account, a trading account that has super low fees and super low commissions. Well, you still can easily lose, right? The stock can easily go from 300 to 290, and then suddenly you're out $10 per share. So without experience, you are more likely to lose than win. So in my opinion, this isn't worth it, really. Just stay away from this. And there's also something called options, which is basically day trading, but on steroids, where you're just leveraging other people's money. Never do that. I don't recommend it for a single person, because you could very easily get into a situation where you lose $100,000 in an hour. All right, the fifth strategy is BRRRRs. So buy, rehab, rent, refinance, and repeat. So this one's really strong, but only if you're willing to like roll up your sleeves. So here is the strategy in a nutshell. You buy a house at a discount, whether it be off market, whether it be you lowballing people, whether it be you paying full price but knowing it's worth $40,000 more in actuality. Regardless, you get a home that is cheaper, at least cheaper than what it should be listed at. Number two is you want to make sure that this property is kind of distressed. What do I mean by distressed? I mean homes that definitely need some repair work done, some renovations. Step three is you want to rent it to whatever a beautiful, gorgeous turnkey home could rent for in that area, because guess what? It turned into a dilapidated drug den into a gorgeous home, hopefully because of you. So now you could probably rent it for, let's say, $500 more than you would have a month prior. So now that you bought this, let's say $100,000 home, and it's renting for, let's say $1,500, $2,000 because it's beautiful and gorgeous now you can refinance. So you can pull out all of your money, and guess what? The appraisal price from the bank is probably going to be higher than what you actually paid. You paid $100,000, maybe the bank looks at it and goes, wow, this is a beautiful, gorgeous turnkey home. We think it's worth $200,000. So they give you a loan for 80% of $200,000, meaning you kind of just made a profit and all your money back on top of it. And then you use that cash to repeat the process, right? Now there are risks to this. I don't recommend this unless you have construction experience or just rehabbing experience, because it is so easy to go over budget on your rehabs. Like for example, what happens if you buy a home for $100,000 and then you spend $90,000 rehabbing it when you thought it'd be $40,000? Well, guess what? Now if the bank appraises it for $200,000, you're kind of screwed. You can only take 80% out, right? That's what, $160K? You just lost 30 grand throughout this process. And what happens if the market changes before refinancing? What happens if it flips from a seller's market to a buyer's one, and now the home is gonna go for 30 grand less than it would have 2 months prior? Again, you just are out of money in that scenario. So it's very much like a mini real estate assembly line. So you build wealth by repeating over and over and over, and that's how you scale. But again, the issue with that is also that it is A, basically a full-time job, and B, super risky, but it is the fastest way to scale. And we're on to the last one now, which is multifamilies. We're talking duplexes, triplexes, or apartment buildings. So some of the pros. You are essentially getting more units for less cost per door, which is great. Let's say that a single family 3-bedroom home goes for $100,000. You might be able to find a duplex, so 6 bedrooms, for $180,000, making your cost per door $90K instead of $100. Now, of course, and on top of that, you also get certain tax benefits like heavier depreciation. Now, there are cons to this though, which is that you'll have to manage multiple tenants all at the same time, which in my opinion, probably means you'll get a property manager, and if not, at a minimum, it's going to be more of a headache for you. Another con is, simply put, the homes are typically more expensive. You know, it's kind of obvious you're buying multiple homes kind of mixed and bundled into one. And I would say the biggest con is that if something goes wrong, it affects every single tenant, right? For example, let's say you have a triplex and they're all based on the same furnaces, the same water heaters, etc. What happens if that water heater goes bad? Well, all of a sudden, now all 3 tenants are complaining to you, all 3 are threatening to withhold their rent, meaning your cost to repair also at minimum triples. So my advice for that is start with single family homes or small duplexes. You want to focus on tenant quality as well, because a good tenant means that the process gets easier, less management. And don't just dive into like these huge deals without any experience or help. You know, I'm always happy to offer my mentorship to those that need it, but even if you don't go through that, just don't do this as a newbie. So let's recap the winners so far. My top choice is always going to be Section 8, and no, it's not just because I offer mentorship, it's because it's guaranteed rent, typically at a higher rate than standard. My second place, something that I also have, is index funds. I have a maxed out Roth IRA and 401k. It's a no-brainer, you just dump money into it and never think about it again. And the remaining 4 are in no particular order, simply because I don't fully recommend any of them, for newbies at least. So there's Airbnb, day trading, BRRRR, and multifamilies. Anyways, if you are serious about Section 8 and want my one-on-one mentorship, click the first link in the description and book a free strategy call with my team. And if you want to join a free community of fellow investors, whichever investment route you want to go down, go ahead and click the second link in the description, because I offer a completely free community for anyone to join, and I do twice a week, Monday, Friday, live Q&A calls that you can ask me anything. As always, I am Joseph Khateri. Comment any questions below, and have a nice day.